Welcome to the daily insights that matter. It's the IPO season with a number of companies looking to raise substantial amounts of money in the run-up to Diwali. Out of this list, one name stands out which has been the most awaited IPO. This is the Mamaearth IPO. So let's dive in and go through the details of this highly anticipated IPO. While Mamaearth is the flagship brand, the parent company goes by the name Honasa Consumer Limited, which is building a house of brands ecosystem to capture India's growing beauty and personal care industry. Honasa Consumer owns several consumer brands internally, which include the flagship brand Mamaearth, the Derma Company, Aqualogica, Dr. Seth's and Ayogya. Moreover, it has also acquired Be Blunt and content platform Momspresso. The company boasts a product portfolio which includes baby care, face care, body care, hair care, color cosmetics and fragrances. Well, now coming to the IPO details, the issue will be open for subscription on October 31st and closes on November 2nd. It comprises two components: a fresh equity issue of new shares worth 365 crores and an offer for sale from the promoters and existing investors who are selling off their shares worth 1,336 crores. Investors interested in this IPO can bid within the price band of Rs 308 to 324 per share. For retail investors, the minimum lot quantity is set at 46 shares, equaling an initial investment of 14,904 rupees. At the upper end of the price band, the company will be valued at 10,425 crore rupees or around $1.25 billion, which is 10 times the value of its assets. In terms of allocation, approximately 75% of the IPO is reserved for qualified institutional buyers, 15% is allocated for non-institutional investors, and the remaining 10% is marked for retail investors. The current shareholding pattern consists of the promoter Varun and Ghazal Alag owning 34.13% and 3.22% respectively. Other investors have invested in the company during the several rounds of funding, in which include the names of Sequoia Capital, Peak 15 Partners and Fireside Ventures. The primary objective of the IPO are to raise funds towards advertising expenses for enhancing brand visibility and awareness. Secondly, capital expenditure towards setting up exclusive brand outlets or EBOs and for acquiring companies in the same line of business. And lastly, for general corporate purposes. When looked at the financial performance, it's a mixed bag. The revenue has surged and the fiscal year 23 witnessed a revenue growth of 58% to 1,492 crores. The gross margin, which calculates the proportion of revenue left after the direct cost, has consistently been around the 70% mark. With the growing expenses, especially high advertising expenses of almost 40% of the company's revenue, the EBITDA margin for fiscal year 23 witnessed a mere 1.5% growth. When looked at the bottom level, the company made profits of 14.43 crores in fiscal year 22, but fiscal year 23 saw losses of 150 crores primarily due to the exceptional items and shutting down of its business, which is Momspresso. However, in the first quarter of fiscal year 24, the company again recorded a profit close to 25 crores. The June quarter for Honasa reported an earning per share of 0.83 rupees. And if we take the upper band IPO price of 324 rupees, this translates into a super high PE ratio of 390x, while the sector PE stands at an average of 53 times. Honasa also boasts a high premium on their products as seen with its gross profit, and that's what differentiates it from its competitors. While PE is not the sole deciding factor to value an IPO, we recommend you to thoroughly research before you decide, as this video is only for educational purposes. Having said that, this is me, Rahul Singh, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com